Welcome. It is with both gratitude and pride that we celebrate our 25th anniversary at QV Investors. The simple founding principles of delivering excellence in investment management and client service have served both our clients and our firm well throughout this quarter century. As an investor, this time period has been fascinating. Shortly after the firm opened its doors, the historical technology bubble of 2000 had popped. Then came the commodity boom. Who can forget $150 oil? At the tail end of this boom, a very overheated real estate market tipped the world into what became known as the 2008 global financial crisis. Fast forward a decade, and the COVID pandemic shocked us all. The changing economic landscape, some of the most severe bear markets in the last century, and interest rates at levels never before seen in financial history have been challenging to navigate. We have done our best to stay true to our philosophy and process, to manage risk for long-term success. In doing so, our core strategies at the firm have not only survived, but delivered value to our clients over this time. Speaking of clients, there is no 25th year anniversary without the support and confidence of one's clients. For this, we sincerely thank you. To this day, 25 years later, we still have over 50% of our assets under management from clients who partnered with us nearly 25 years ago. We are truly honored to be able to say this. In addition, one of our principles at the firm has been to be fully aligned with our clients. The employees of QV continue to invest directly alongside you in the very same strategies. I believe they call that having skin in the game. Supporting our clients, we have our QV team. A significant change over the years has seen us grow from a few employees to a team of nearly 30 wonderful and dedicated partners. While the numbers have increased, the focus on maintaining a caring and supportive culture has not changed. Over these years, we have worked hard to maintain our core values. Putting clients first, integrity, excellence, teamwork, and accountability. These values provide us the roadmap for success if we can stay true to them. I thank our past QV partners for the foundation they've helped us build, and thank our current ones for what they've accomplished to date, and what I know they will continue to accomplish on behalf of our clients going forward. Much like the first 25 years, we expect the next 25 to be full of change and challenge. Who knows, we may even see that $150 oil price again. But one thing that won't change is our commitment to our risk-managed investing process. We're excited to continue to support our clients, our team, and our community, and build the QV brand into the future.
Over the last year, we have taken further steps to enhance our analysis of environmental, social, and governance factors in our investing process. We have always considered ESG factors because we believe it helps us better manage risks and support long-term returns. Our sustainability analysis is fully integrated, meaning it's conducted by our investment teams directly so that it can inform our broader understanding of a business. When we say we've always considered ESG, let me give you an example of what we mean. One of our tests for investment is franchise and outlook. Environmental and social issues are key when assessing a company's response to evolving industry dynamics and long-term competitive advantages. We want to understand if there are material risks in these specific areas that may impact our investment thesis. The two biggest enhancements to our ESG analysis have been the introduction of our ESG committee and our proprietary scorecard. The ESG committee coordinates the firm's ESG initiatives and is also a forum for sustainability-focused discussion. Our proprietary scorecard is used across all strategies. It's a tool to sharpen our analysis of ESG risks and opportunities and provides clarity about which companies are disclosing, managing, or leading in certain areas. In 2020, we seeded a global small cap strategy with QV's capital. Beginning in April 2021, we offered this strategy as a pooled fund and is currently invested in by our private clients, institutional accounts, and employees. We felt this was a natural strategy for us to offer since we've been managing Canadian small cap equities and global large cap equities since the inception of the firm. We feel that GSC is an extension of these two strategies, enhancing the diversification of QV's portfolios by opening up a deep universe of global businesses across developed markets. We have added to our investment team to assist in managing this new product. The global small cap portfolio follows QV's disciplined investment process with our test for security selection and risk management process.
We at QV have always prided ourselves on delivering superior customer service to our clients. We feel we have a unique advantage in that we work closely with the decision makers on our investment committee and can provide more transparent dialogue with our clients. Over the past year, we have taken further steps to elevate our client service standards and increase client engagement. We have made a commitment to providing more frequent content to our clients through various mediums addressing topics on investing, tax optimization, estate and financial planning. In today's information age, it is our hope that with these additional resources, our clients will be able to make more informed decisions about their financial futures. We have also invested in several technological tools to help our clients meet their financial goals and objectives and to further enhance their experience at QV. We have found that these initiatives have allowed us to better understand our clients and have helped us provide more personalized service.
Over the past year and a half, a record-setting recovery in equity markets has sprung from the depths of the pandemic. Developed world markets and our funds are now at or near all-time highs. Animal spirits have fed on this stimulus and risk-seeking behavior is alive and well. Initial public offerings are coming to market at a blistering pace, and earlier stage growth stocks with no income generation, while carrying high hopes for a promising future, are receiving hefty valuations. At the same time, as we move further past the depths of the pandemic, the costs associated with stabilizing the economy are coming to the forefront. Many individuals and businesses continue to struggle, while labor shortages, inflation, and supply chain challenges have become prevalent. Record highs in stock markets, record lows in interest rates. We are at a time where risk management may not be in vogue, but we believe it is more important than ever. Now is not the time for disciplined investors to throw caution to the wind while chasing short-term returns outside of their core competencies. QV's quarter century of risk-managed investing provides valuable context in today's environment. Our history consists of hundreds of monthly risk management audits, helping to provide consistency while reinforcing discipline over time. Throughout our past and today, our portfolios are underpinned by attractive valuation metrics, strong balance sheets, growth, and dividends. Although we remain steadfast in our commitment to our process, we must also recognize that today's backdrop is quite different than the past. Central bankers continue to suggest inflation pressures are transitory. Indeed, some pressures are, but others have structural underpinnings. Coming out of the pandemic, a few important trends to recognize. Essential labor has in many ways been underpriced and undervalued for too long. Labor is rightfully demanding more. This comes at a time when the sourcing benefits as well as the political and environmental benefits of onshoring parts of the supply chain outweigh the costs. In addition, the necessary energy transition away from fossil fuels has momentum, but the associated costs appear underappreciated. Energy created from fossil fuels underpin almost every aspect of today's economy because they are cheap and effective. Global energy investment has averaged around $2 trillion per annum over the past 5 years, a little more than 2% of global GDP. To effect transition, it is estimated that this spending needs to more than double in the immediate term. This comes at a time when developed world debt levels are already at record levels. Policymakers need to be very careful not to stifle economic growth and innovation while we embrace this transition. As cost pressures are mounting, tailwinds for assets are dissipating. Stimulus measures are fading while the push for higher taxes is increasing. These are important considerations at a time when economies and markets are more reliant on debt remaining cheap and accessible than ever before. Investors must be mindful of these dynamics. Although the fiscal and monetary backdrop is quite different today, in other respects, today's investing environment reminds us of the tech bubble of the late 1990s. Growth at any price was in vogue, and less attention on everyday businesses offering valuable service was a focus. We know how that played out, and although history doesn't repeat, it often does rhyme. In equities, we have constructed our portfolios with reasonably valued everyday businesses that exhibit pricing power and productivity gains through innovation and growth. We expect these businesses to compound earnings at healthy rates while maintaining defendable business models in more difficult periods. In bonds, we are concentrated in short duration, high quality issuers, providing competitive yields without having to take on significant interest rate risk. If interest rates rise, we will consider extending duration to allow for more defensive contribution in more challenging times. In Latin, QV stands for Quo Vadis, loosely translated to, where are you going? Be wary of those that attempt to answer that question with confidence when it comes to trying to predict short-term moves in the stock market. Where QV is going is rooted in our past. We will continue our risk-managed approach to investing in enduring businesses run by capable, candid people on the basis of value. This has underpinned our success over the past 25 years. Expect nothing less moving forward.